course, we can't talk about Kevo without mentioning Tradelines. Tradelines, subprime lenders and primaries. That is that's part of his brand. So we gotta talk about it. Basically, in layman's terms, a trade line is an account that reports payment history to your credit report.
A lot of people have the idea of a trade line being an aged or seasoned account, meaning that it has a long history attached to it, and you are basically added on to someone else's account as an authorized user. Now, there's two different ways to be added to someone's account as an authorized user. There's something called piggybacking, where one of your family members or your loved ones adds you to their account and you're considered an authorized user, or it's through purchasing trade lines. And what happens is a company or individual will accept fees from you, will add you to someone else's account, and the benefit is they have a long history of positive payments, and they also have a large line of credit on their credit report, and it's going to help you lower your credit utilization and also add positive payments to your credit report, which in fact does improve your credit score. The thing about these trade lines are a lot of these people are unaware that you're being added to their account, and two, it's very costly.
This can be a credit card, mortgage, car loan, student loan, etc., etc.
As everyone has multiple credit scores, and some scores may not consider authorized user activity as representative of your trustworthiness as activity on an individual or joint account. For that reason, if you're looking to rebound from damaged credit or to see a big boost fast, you may want to open an account of your own. One of the credit scores that I was mentioning, FICO credit score, FICO 8 model, which is one of the credit scores that they use to determine your creditworthiness, that doesn't even incorporate authorized user activity. So when you're looking to buy a trade line and use that aged or seasoned information to help you, to benefit you, a lot of you are wasting your time because that's not even going to be used to determine your creditworthiness.
Rather than spending $1,000 to acquire aged trade lines, it makes more sense to simply get a secured credit card with the money you would have used.
And that I don't really talk about them or recommend them is because, I mean, these jewelry account primaries, I mean, they're trash banks. I mean, and when I mean trash banks, I mean banks that they're not a major bank, they're subprime. I mean, they lend to anybody. And a lot of the other lenders know this. So when they see something like that on your credit profile, they're kind of like, it's still, I mean, yes, it looks better than an AU, yes. But still, it's kind of like, all right, my jeweler is all right, you know. Whereas if you were to go the other route and get the secured card like from Citi, yeah, you're going to start out with a low limit and it's going to be a secured card, but over time, that's going to grow into an unsecured card with a higher limit, and it's going to be from a major bank, and it's not going to be a store card, it's going to be a revolving line of credit, which that looks the best on your credit. In the video, you'll notice he said, you know, go to Credit Strong, which Credit Strong's good too. It's pretty much self-lender, you know, Dr. Pepper, Mr. Pibb kind of thing. They're just, you know, a different type of self-lender deal. He suggested getting the $18,000 loan. And in my opinion, okay, yeah, that is good, but the only problem with that is most people can't afford the monthly payment that came with that. So it's like, if you can afford the monthly payment, then great. But again, there's another problem or caveat with that, and that's it's only going to help your credit after you've paid at least half of it off. So you got to think, you're going to be waiting, unless you've got the cash to just put down and knock it down real low, you're going to be waiting a hot minute before that balance gets dropped to a level to where it actually helps.
So basically, yeah, we have two aspects of credit repair. One is disputing all derogatory information on your credit report with credit cleaning letters or dispute letters. Second facet is basically getting a secured credit card that you fund with your own money. Essentially, you give the bank a deposit or as collateral in the event that you default on your payments, given that they are taking the risk of giving credit to you with your bad history. This allows you to begin building positive payment history as you dispute the derogatory or negative ones. This, of course, is most easily accessible to those who have bad credit, who otherwise would have been rejected or denied access to it. And after 5 to 18 months of consistent on-time payments, no payment delinquencies, the secured credit card becomes an unsecured credit card, and you get your initial deposit back. Straightforward.